Market Watchers Live show with Aaron Swenlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours to review it. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and we'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of Market Watchers Live and provide us suggestions for improving the show. For those of you joining us for the first time today, welcome to the show. You picked a good one, and we're certainly happy to have you with us. And for our regulars, welcome back. Just a couple of very brief announcements before we get going. We do have Chip Anderson in the house today. He will be joining us for the Everything Stock Chart segment. Greg Schnell will be here with us tomorrow, Wednesday, December 20th, and he'll be giving us a point and figure review. Just as a reminder, we announced this yesterday, but there will be no Market Watchers Live next week between the Christmas and New Year's holidays. Of course, the market is closed on Christmas Day and on New Year's Day, but those days in between, next Tuesday through Friday, we will not be here live, but we will be showing the best of Market Watchers Live. So there will be some recordings of recent interviews with special guests, various educational segments, and so forth. So keep checking back to the page here for Market Watchers Live, and we'll have a list of the segments that we'll be showing. Probably up later this week sometime. Our live show, though, will be going through the end of this week, and then we will return back on Tuesday, January 2nd, 2018. Kind of hard to believe, Aaron, that we are almost into a new year. But how are you doing this morning?
I know. I can't believe it. I'm not ready for Christmas. I don't know about you, but I still have some stuff to do. But you know, it'll get here. It'll get here, and I'll have everything done. I'm pretty good at procrastinating, so.
I'm about to start my Christmas shopping. Should be in. But we do have a special guest in the house. Chip, how are you doing this morning?
Hey, I'm doing well too. Got a bit of a cold. Just finished my Christmas shopping, actually.
Always figures, we have you on the show, you're going to get the cold. That's just a given.
All right.
We got Chip coming back in here probably in about 10 minutes or so to go through the latest edition of Everything Stock Charts. And without any further delay, Aaron, why don't you go ahead and take it away, go through today's agenda, and give us that first market update.
Sounds like a plan. As you noted, we will be giving you market updates on the hour. I'll be giving you one shortly. We have some technical headlines for you. And then as Tom said, Chip is here. We're going to talk everything stock charts, followed by the scooter movers. What's happening right now? Who are the big movers that might be sleepers? 10 and 10 to 1. We're going to start off with Gold Miners ETF GDX. So if you want to go take some notes and see how your analysis compares to Tom's, there you go. Then we have our ever popular What Would You Do segment. And I will give you a little bit of a hint. We will be looking at GE. So again, if you wanted to go take a few notes, and then we'll finish up with our mailbag questions and wrap it all up. But with that, let's get into our first market update. All right, and here we go. First of all, let me show you the big headlines that are going on right now. Predefined alerts, we run these scans and they tell us what's happening. You can see it just updated again. Really what we're seeing are more new all-time highs. NASDAQ has just set one. We can see the NYSE is on the right path as well. The BPI has crossed above 70. Russell 2000 has crossed above 1550. And the TSX just set a new all-time high. We'll take a quick peek at that chart for you. And you can see really nice breakout. We're seeing from previous tops here. I could see a double bottom here, but it's coming off a rally. So, those are reversal patterns. So I wouldn't get too excited about that. But that bounce off the 20-day EMA and that move to get some new intraday all-time highs was impressive. Let's take a look, though, at what's going on around the market with our candle glance. And here you go. So you could see markets opened lower, and they are continuing lower. The S&P 500 is looking not healthy right now, and the NASDAQ is following suit as it starts to log some intraday lows. Russell 2000, it did go above 1550, but we can see it's now already slid below that and is in the negative. We have the Wilshire 5000 mostly unchanged, so it's doing a little bit better than the other large cap indexes and the Russell 2000. Treasury yields have taken off today. We're now reading at 24.52. UUP is in the negative right now, pretty much bouncing around in a trading range between 24.34 and 24.37. Commodities gapped up and pulled back a bit, but they're still up right now. And we can see USO having a pretty interesting day here in a trading range as well between 11.45 and about 11.50. Currently, it's pushing near the top of that range. We can see GLD is about, reading almost no change. Been a bit of a volatile day. Up in the morning, down in the lunchtime hour, but we are making our way back into the positive territory. VIX is rising. We now are seeing a reading above 10. Haven't seen that in a while. And declines are leading advances. And that concludes our first market update. Back to you, Tom. I know we have some technical headlines.
Yeah, we've got a pretty big day in terms of headline news today, so let's go ahead and jump into that. First, I'm just going to show you the S&P, as Aaron was saying, kind of down today, and you can see right here, potentially maybe setting up for a top, maybe an island top, but of course we need a confirming gap down, but this could be a little bit of a cluster. The MACD, though, to me suggests that with the moving averages accelerating, the short one away from the longer one. That's what you get when you see this MACD rising like this. I think that tells us that if we do see a pullback, it's probably likely to be just a short-term one. We continue in this longer-term advance. But some of the key headlines today, we had some more home building news out. And so the first thing I'd like to do is just pull up the first chart, which is a 10-year Treasury yield. Look at this move on the yield today. Right now, it's up about 6 basis points from 239 up to 245 and change. We are at the high of the day. This means money is rotating away from treasuries. This morning at 8:30, December housing starts came out, 1,297,000 units. That's what was reported. The market was only expecting 1,240,000 units. And then December building permits came in at 1,298,000. The market was looking for 1,270,000. And all of this news, good news for the housing area, comes on the heels of yesterday's housing market index, which was 74. The market was only expecting 70. And tomorrow we have the existing home sales out. And that is the expectation for that is 5,550,000 units. So we'll see whether or not the good economic news in the housing area continues. But in the meantime, you can see a huge move up here in the 10-year Treasury yield. We are now flirting with the highs that we saw about 2 months ago, close to 247. So this would be a major breakout and likely lead us all the way back to that early March high near 260 if we can negotiate the 247 and a half area on that 10-year Treasury yield. So that'll be one thing to keep in mind. Another area of the market that I think is really important to watch, or at least another index, is that home construction index. We had a huge rally, and this is really a poster child for why we do what we do in terms of following the price action. This has been going up steadily for the last few months, even as we head into the colder winter months. And it tells us that the market is expecting the good news that we're seeing in terms of these economic reports that are coming out. So that's the whole premise behind technical analysis, is that the price action precedes the fundamental news. And I think this perfectly illustrates exactly that. A couple other areas of the market. First, we've got utilities. Anytime you see the yields on the rise, those treasury yields on the rise, that normally is not going to bode well for the utilities, because many folks that are looking at utilities or invest in utilities do so for the income. And anytime the treasury yields start rising, it makes the dividend yields on these utilities not as attractive, and you see money flowing away from this group. So here over the past month or so, you can see we topped in mid-November. That is a bearish dark cloud cover candle that marked the top, and we have continued to move down. I would be watching potentially the lows that we saw back in late September, down around the 52.5 area. That could be where we are heading on the XLU, especially if the yields continue rising. That will put some pressure, probably keep a lid on the utilities. All the FANG stocks today, at least when I checked them earlier, were lower. So if you take a look at stocks like Facebook, you can see Facebook, and these stocks are not in bad shape technically, but they had risen off the recent lows, and as a result, we're getting a little bit of a pullback here. But taking a look at some of the key stocks, Amazon down a little bit. We've got Google, which I think is also down a little bit. That's weighing on the internet index today. We've got Netflix also struggling to the downside. So you can see all of the key stocks, which really help to drive the NASDAQ, are all struggling today simultaneously, and Apple also down. So you take those 5 stocks, if they're not doing well, chances are the NASDAQ's not going to be doing well, and that's exactly what we see today. One other news story out that I thought was interesting is UPS this morning announced that they're placing a reservation for 125 new fully electric semi-trucks. And if you're following the electric vehicles, you know that Tesla is the big name there, and the order is through Tesla, and Tesla technically has been improving. You can see the volume that has started to pick back up. We went through a couple of key moving averages, and on the daily chart now, this is starting to strengthen, and I would look for that rising 20-day moving average to provide some great support on any pullback. If we look further out to the weekly chart on Tesla, you certainly could make a case that the 300 area, 280 to 300, would probably be pretty good support. And that's why I think it's always a good idea sometimes to step away from that daily chart and take a look at the big picture, because in the big picture, you can see our recent lows came in around 300, and then the tops that we saw over multiple years, we saw a high in 2014, another one in 2015, another one earlier in 2017, all around the 280 area. And since we broke out above that area, it's one of the, it's kind of TA 101, broken price resistance becomes support. So this is an area on the weekly chart that you would actually look for some pretty good price action if you're on the bullish side, and that's exactly what we're beginning to see. So again, take away the fact that we are getting close to that price support on the long-term chart, and then we go back to that daily chart that I was showing. See if we can pull that one up. Yeah, I mean, when you see the breakdown, it doesn't look really good on the daily chart until you pull that weekly chart up. So it's always a good idea, I think, to back away from these charts on a daily basis, go back to the weekly. If you tend to be a day trader and you're looking at intraday charts, the same premise holds true. I would back up off of those intraday charts and maybe take a look at the daily chart for a little bit more direction. So with that, I know we've got Chip Anderson in the house. I don't want to waste any more time here with this, so let's bring Chip in. What do you have for us today, Chip?
Hi, Tom. I've got several things going. Let me get the screen all moved over. Okay. Then we'll show. I want to start by just kind of finishing up on my talk from last month. Let's see. Can you see my screen?
Yep, we got it.
Okay. So just really quick, I want to give you a couple of tips, and then I want to get into what market analysis is all about. But before we get into that, a quick tip and a quick review of last time. Last time I was here, I was talking about scanning, and I gave my quick scan demo. And I have a scan that I sent out as part of that demo. And basically, you run the scan, and then you use Candle Glance to kind of winnow down the results. And we ended up with 4 results. And I just wanted to give everybody a quick update on how those results were doing, just give you a sense of how much scooters and momentum can really help out. So those are that's the scan there, and I think it's been put into the chat window so people can cut and paste it. And also you can review the November 21st presentation. Go back and look at that. Here's our member page, and this was the tip that I wanted to give you. I took those scan results and I saved them away in a chart list down here. Scooter scan. Again, you can watch the previous show to see how I did that. Now, right now, if I click on this, the title of my chart list, I'm going to see these results, but I'm going to see them in summary view. Let's say that I'm not really wanting to see that in summary view right now. I really want to see the charts. So I have a couple of ways to do that. One is I could click View List and click on 10 per page. Or if I want to see if it's always true that when I click on a chart list, I want to see 10 per page, what I can do is come over here to the gears, click on the gears, and I can change the default chart list view. The default chart list view normally is set to summary, but I can change it to any of the views that I like, including 10 per page, and then hit Save Preferences. Once I've done that, now if I click on any of my chart lists, instead of going to summary view, I'm going to go to 10 per page and see these charts immediately. So that's my quick tip. Hopefully that'll help some people. So a couple of the stocks that I saw, these again were selected on November 21st, so somewhere around in here. And we can see that Urban Outfitters has done quite well since then. We can also see that the other one that I picked was Drive Shack. It hasn't done quite so well. It got very volatile. It's at the very least, though, it's kind of gotten back to where it started. So that's good. My scan also picked out United Rentals, URI. It has also moved higher since then. And finally, Dollar Tree has also moved very high since then. The point is that this just gets to the concept of momentum and a stock being oversold. I'm never a fan of anything that says oversold. I think momentum continues until it goes away. And so as long as momentum is good, you can measure it via MACD or via scooters or via other ways. As long as momentum's good, stocks will always have a chance to go higher. And that's what's happened here. I'm not saying that these stocks are the best stocks to have picked on November 21st, but they worked out fairly well for my scan. And again, momentum is your friend is the key message that I'm trying to say here. All right. So let's get into my actual real presentation. And we'll go back to the slides. And I want to talk a little bit about market analysis. Market analysis is essentially what Tom, Aaron, and all the commentators at StockCharts.com do in a general sense. It's a different beast, actually, than doing individual stock analysis. And not everybody recognizes this. Market analysis is where you're trying to determine the overall health of the market, either the market as a whole or a very subsector of the market, subsegment of it. You're trying to answer questions like, should I be in the market at all? And if I should be in the market, how aggressive should I be? And then, are there subsectors of the market that I should focus on versus other sectors? So market analysis kind of sets the stage for then you to actually select and focus in on stocks that you really want to analyze in depth, because you can't analyze every single stock in depth. You need to cut things down. And so this is a great way to do that. Market analysis itself consists of several different building blocks. When you're doing market analysis, you're really looking at big picture stuff. It's easy to get into the minutia in technical analysis, get into analysis paralysis with a zillion indicators. But in market analysis, you want to try and stay high level. You want to focus on trend, you want to focus on strength, and you want to focus on relationships between markets. And so I'm going to spend the rest of this quick presentation talking to you about each of these three things and showing you a couple of ways, simple ways, that you can use to analyze each of these three pieces of the puzzle. So starting with trends. When you're doing trend finding, there are several different approaches. The most simple and the most straightforward from a technical perspective is just to do simple trend lines. Connect up the peaks and the troughs and see where the lines are going. There's an issue with trend lines. They're subjective. Some people see a trend line here and some people see a trend line in other locations. But they do allow experience and intuition to play a role. And so they're not just automatic and robotic. Some people see that as a minus, but I see that as a plus. Another indicator that you can use, or another way that you can look at trend and trend strength, is via the ADX indicator. And I'm going to show you an example of that in just a minute, but it actually quantifies the strength and the direction of a trend. So if you, for instance, have a hard time figuring out if something's trending or not by looking at it, you can use the ADX. More importantly, if you want to try and get trend into one of your scans, the ADX indicator is a great way to teach the scan engine how to figure out if something's trending or not. And then finally, there are other ways, but the final one I want to talk about today is P&F charts. I know Greg's going to talk about that more in a future show, but P&F charts I absolutely love, the X's and the O's, and they are all about trend. I'll show you how in just a minute. So here's an example of a chart, the chart of the Dow as of yesterday, and showing two examples of the trend following indications. First is trend line, very clear. Just draw those trends, and you can see not only is the trends up, but it's been increasing as it continues over time. This is a wonderful, wonderful chart, at least from a from a longer term daily perspective, there's nothing but up on this chart. It's really, really nice. You can also see that with the ADX indicator down below. If you didn't believe the trend lines, the ADX indicator is showing you that it's trending, and it's trending strongly. Certainly back at the beginning of November, it was trending very strongly with the ADX. See if I can get my mouse going here. My mouse is not appearing. We'll figure that out later. That was the ADX indicator. There's more on this in Chart School, plus all of these charts are available online. I'm going to give you a link to that in just a minute. This is my P&F charts. P&F charts are all about trend, but the trends are represented as vertical columns. It's very important to remember that when you're looking at a P&F chart. When you see a vertical column, especially a vertical column of X's, that means that the stock is in an uptrend, or the symbol is in an uptrend. And you can see, as we know, the Dow has been in an uptrend for quite some time, and it's a very strong uptrend, and it continues. So, in fact, we haven't been in a downtrend, a significant downtrend, since way back here. This is actually the beginning of 2016. There was a downtrend column of O's, and since then, we've only had very short column of O's, very simple pullbacks. So this is also a very strong chart for the Dow. Okay, so that's trend, just trend in general, nothing too surprising there, hopefully. Trend strength is something else you want to measure. And once you identify a market, and if the market's going up, you want to know, hey, is this uptrend going to continue? And you look at strength to do that. Strength is another word for momentum. And one of my favorite momentum indicators, very, very sensitive indicator, is the MACD histogram, the difference between the two lines on the MACD chart. It's an objective measure of the change in momentum. And if you see the MACD histogram starting to weaken, then you're probably going to see the trend weaken shortly thereafter. Another way to look at trend is to consider volume, the number of shares that have traded. That's essentially the show me the money situation. Are investors putting their money where their mouth is in terms of that trend? There are some problems. Volume is historically very spiky. It's a little difficult to figure out the actual story being told by volume. And it is not available for a lot of indexes that we look at in market analysis. So that can be a bit of a problem. To make up for that, though, many of these indexes that we look at in market analysis do have metadata associated with them. By metadata, I mean data that isn't directly related to price or volume. It's data that is derived by basically adding up statistics about a large group of stocks inside of the particular segment of the market you're looking at. For instance, if you're looking at the New York Stock Exchange, how many stocks have advanced versus how many stocks have declined. That's the advanced decline stuff. There's also what stocks are making new highs, new lows, the amount of up volume versus the amount of down volume. All of those are meta indicators, breadth indicators about what's going on in that group, in the particular group. The downside of breadth data is it's only available for certain kinds of indicators and certain kinds of markets. It's not available for every particular way you'd like to slice and dice a market, but that's okay. For what it is available, it's really useful. Here's an example of the MACD histogram. It's an indicator that you can add at the bottom of your chart. And we can see here, this is just the histogram, not the rest of the MACD. And what's important here, notice how, especially during this strong uptrend phase that the market's been in since September, the majority of the time the MACD histogram has been positive. It's only for a brief amount of time during this pullback in mid-November that it went negative, and then it quickly reversed itself. It's a very sensitive indicator, but to have it remain kind of positive for that long a period of time is pretty unusual and a very good sign. And then this is an example of the NYSE advanced decline line. This is the advanced decline data, which we have as stored as a ticker symbol $NYAD. And that data is, however, the data itself, the raw data, is very spiky. If you looked at a plot of just the NYSE by itself, it'd be a lot of up and down bars going sideways. So instead of plotting it as a regular chart, you'll want to plot it as a cumulative chart. This is where we add up all that information, and we can get a longer term trend of what's going on. And we see here that the AD line has been very strong during the same period the stocks have been strong. The final thing that we want to look at when we do market analysis is relationships. There are three ways to do this. We can use overlaid charts, where you plot one stock on top of another. It's very visual, but as I'll show you in a second, it can be very misleading. To do that, by the way, you'll use the price indicator in the behind price position. Again, all the charts I'm showing you, I'll show you a link to that in just a minute, and then you'll be able to see the exact settings that are used to create each of these charts. The next one to do relationships is actually much more accurate, I think, is the ratio chart. A ratio chart is where you take one market indicator and you divide it by another one, or one symbol and divide it by another symbol. It'll show you the true relationship between those two symbols. And the way you do it on StockCharts is you take the first symbol that you're interested in, you type that into the symbol box, then you type a colon, and then you type the second symbol. Again, all of this is inside the symbol box. And then you plot that as a line. I'll show you an example in just a second. And then finally, something that John Murphy likes. John Murphy likes all of these techniques, by the way. I'm pulling most of these techniques from John's approach. But another one he likes is the correlation indicator. The correlation indicator can quantify the strength of the relationship between two symbols, and it can also show you the direction. Is it a positive or negative correlation? So what do these things look like? Let's go back to the first thing, the overlaid chart. Here are two overlaid charts. This is the SPX as well as the XLK, the technology ETF, the technology sector. And we see these two plotted on top of each other, but there's a problem. The problem is that they're plotted on differing scales. We deliberately this is the scale for the XLK, and this is the scale for the SPX. We deliberately stretch those scales so that both lines will touch the top and the bottom of the chart. And so right now you would think that these two have stayed very close to each other. You'll think that they're kind of moving together. That's a misleading conclusion, and I'll show you why in just a minute. Sometimes this can be useful, but a lot of times this can lead to grief. So I much prefer the ratio approach. Here's the ratio approach where I've taken $SPX, a colon, and then XLK. And what I'm left with is a single line. The values over here on the side are actually unimportant. They're not really useful. What's useful is the direction of this line. Is this line going up or is it going down? And you can see in general, this line is going down. If the line was going up, it would mean that the first symbol is outperforming the second symbol. So if it was going up, it would mean that the SPX is outperforming XOK. But in this case, it's going down. That means XOK is outperforming SPX. And so it means that the technology stocks have been stronger in general than the market as a whole, and technology stocks, to a certain degree, have been driving this rally. And so that's a really nice piece of information to know. And then similarly, I've done the same thing here with XOK and SPX in terms of correlation. This is a plot of XOK by itself. And then below is the correlation indicator that I've added to the chart with a parameter of XLK. And we can see here that the correlation has been very strong up until very recently. Only right at the end of November did things kind of come unhinged. But for a long time, the correlation was strong. What that meant was that when SPX moved up, XOK also moved up. When SPX moved down, XOK also moved down. So that, in other words, they moved kind of in lockstep. But as we've seen, even though they were moving in lockstep, XOK was still outperforming the SPX to a certain degree. Only recently, we see here, there's been a disconnect. That means that XOK moved down, as we can see on the chart, but probably SPX did not move down. And that's what caused these things to get unhinged. A correlation efficient of 1 means that, again, they're very closely positively correlated, moving together. A correlation of -1 means they're negatively correlated, meaning they're moving in opposite directions. And a correlation of 0 means it's kind of 50-50. They're all over the board. There's no real connection. So the correlation coefficient can be extremely useful in that regard. So that, just quickly to wrap up here, I'm showing you the techniques. Most of these techniques are techniques that John Murphy uses, has pioneered, has talked about extensively in his commentary. You can study all of this information. If any of these indicators are new to you, I recommend strongly going to Chart School. The articles there are much more in depth than what I can do here, and you can learn more about each of those indicators. Here is the link to the charts that I just showed you. If you go to this link right here, you'll see all of them. By the way, side note, you will see an error message for the point and figure chart. We'll get that fixed later today. Don't worry about that error message. The rest of the charts, though, you can click on, and you'll be able to see the settings that I was using. I strongly recommend that you spend time. If you're at all interested in market analysis, John Murphy is the master. John Murphy is the beginning and the end of all this stuff, in my opinion. You want to study what he's saying, his commentary, and how he uses the charts to come up to with his conclusions. And then to plug Aaron here, Decision Point, I consider that a master class in market breadth analysis, especially. The DP charts have been right at the forefront of market breadth analysis for years. And Aaron continues that trend, especially with the information that we have in the decision point gallery, which you can see at this link down here. And so with that, I'm going to wrap it up. Were there any questions?
Not really, except for, those typical, oh, can you add this, Chip? Can you add that?
You can add, sure, you can add a bunch of stuff. I'm trying to show you the building blocks of market analysis here. And so you can the point is I want everyone to kind of focus in on these fundamentals and understand these fundamentals before you go adding a zillion other things. It's very common in technical analysis for somebody when they get started to put in 47 indicators and do really, really complex stuff right from the get-go. Please, my advice is to start with the basics, really build it up from the basics and make sure you've got a firm foundation before you go nuts.
Yeah, there was one other thing that came in, Chip, and I think this is kind of interesting. There was a question that came in, and I think I know the answer to this, but the question that was asked is the listener had plotted the XLB colon XLB and also SPY colon SPY, and it comes up with huge gyrations. And I think the reason that occurs, and you can correct me if I'm wrong, but he's probably using a candlestick chart, which is showing the action during the day on the one, XLB, but the other XLB is a static close. So it's always returning back to the same point. But if you do XLB colon XLB, it's like this huge gyration, but it's always ending at 1 at the end of the day.
Well, there's probably a couple of things going on there. And again, this is more just diving into the software than actually doing market analysis. Don't over focus on our system. Focus on the market and how to make money with the market. In this particular case, yes, if you're doing a ratio chart, you always want to plot it as a line, not an open high-low close kind of situation. You just want to plot the closing values of the ratio chart. And then the second point is remember that we auto scale all of our plots. And so if there's even the slightest little calculation difference, you'll see a big jump on that particular plot. The jump is from 1.000000 to 1.000001. It's not that'll look like a big jump on the chart because of the way we do the scaling. It's no big deal. Don't over focus on it.
Awesome. All right. Well, we certainly appreciate you coming on, and know this Everything Stock Chart segment is certainly appreciated by all of our listeners. We do have this every Tuesday, and we get rotation from you and Bill Shelby and Grayson Rose, and it's always great to have you guys on the show.
Hey, I enjoy it. I'll be back next time. Take care.
Right. Sounds good. Thanks, Chip. And there he goes. Yeah, I've talked about these relative ratios, and I always use a line chart. And I think that actually is a perfect illustration why you want to use a line chart, because I do think that first symbol, for whatever reason, is taking the high-low, as Chip was talking about, and it compares it to a static close. So that's why you're seeing these huge gyrations on the XLB versus XLB or SPY, versus itself. And the same holds true a lot of times when you're comparing something like the S&P 500 to, say, the NASDAQ or to, say, the Russell 2000, because the S&P 500 will gap up. Maybe the Dow might even be a better example, because many of the Dow stocks don't open right at 9:30 a.m. Eastern Standard Time. So the Dow doesn't show nearly as many gap ups. If you want to see the gaps, you have to look at the ETF, the DIA, because the Dow index itself at 9:30 isn't really changed much from the prior day, because many of the component stocks haven't opened for trading right at 9:30 in the morning. So you want to be careful using candlesticks when you're using the relative ratio charts. I think Chip made a great point there. And if you change those XLB, the two charts that were asked in the chat box, the XLB colon XLB and the SPY colon SPY, if you change those charts to a line chart, you'll see a straight line going across. So the ratio themselves, that ratio works. It's just, maybe as Chip was saying, just looking a little bit too deep into it. You just want to make sure you focus on line charts.
All right.
Okay, so we have roughly about 15 minutes till the 10 in 10. And I know we've got the
scooters.
Yeah, so why don't we go ahead and jump into the scooters? Would you like to start, Aaron?
Sure. Let's start this scooter mover thing here. All right. Let me get to where I have. So I just, this is, we're going to show you two different methods of finding scooter movers. And I'm going to show you how to do it from the member homepage. And so let's get started with that. So first of all, you want to make sure you have, your panels all set up here. So that you'll be able to access your market movers. But right here in the drop down, and somebody asked about the ticker cloud because Chip has that on his. So it's just one of the options here to get that ticker cloud. But what we're going to look at are the scooters. And you can choose, large cap, mid cap, et cetera, et cetera. I'm just going to use the large cap right now. So these are our top 10. And, clearly they're the high batting average, doing very well right now, and because that's why they have that high ranking. And again, StockCharts technical ranking. And if you want to know more about how that's calculated, I highly recommend you go to Chart School and look up the scooters, and you'll see how it's calculated. The beauty of that particular indicator, the scooter, is not only does it give you an idea of internal strength, how a stock is doing in the mainly intermediate to longer term, it also tells you how they're doing in relation to the other scooters that are in their universe. So I think it's quite powerful. And I know Greg Schnell likes to use it as well. So anyway, these are the top 10 that we have. But I want to look at the movers, what's going on right now. So these are our top ups. These obviously are moving the fastest. So what I'm going to show you is I will pull it up in an RRG so that I can really figure out which ones have, are rotating the right way. Because not just because they have scooter movers doesn't mean that they have the best looking. They're not doing that well as far as rotation, maybe. So when I looked at this, I pulled it up, and this is the weekly. But I want to move it to a daily just to get a better feel for the shorter term, because that's what I'm looking at right now. And what do I want to find? As we can remember from Julius, is you want those 0 to 90 degree moves. So I would say the first one that really sticks out right now would be JD. So I'm going to definitely look at JD. And then you can also see that APC, and DVN, all of these are in that improving category, and they're all pointing to the northeast, which is what you want to see. These are already leading, so we could look at DRY or DRI, but I'm more interested in what's improving, and seeing a high scooter ranking definitely improves my analysis. So I'm going to look at a few of these, right? Let's look at, so I'm going to look at JD. And I'm going to definitely look at JD. We'll look at NBL, and then I'm going to show you APC. And if we have time, DVN. All right. So, you have some big scooter movers working to the upside, but you can still see that in the shorter term here, they're not really improving that much. These are the strong improvements. So let's go look at some of those. So I'm going to start with JD because JD looks pretty amazing there up in the upper quadrant. And let's look at what we got going on here. So I'm going to annotate very quickly here. I know we have just enough time here. I'm going to set up our support resistance. Okay, so first of all, let's get kind of that major support resistance line in here. Look at that. We had kind of that island come up and then it backed right back down. I'm looking at this double bottom off of this longer term decline here, and we got that breakout. We should expect to move the size of this trading range, really, because it's from the bottoms to the neckline. And so that to me, when you look at it, is suggesting that we're going to get a move right up to this level, which matches up perfectly with overhead resistance at that September high. So this chart, I like it. And look at what's going on with the PMO. I can now check it to other things besides the scooter. But scooter is doing exactly what you want to see coming off of a bottom right here. So that is an example. I'm not going to save these, but okay, I had 2, 3 more. We'll do those very quickly. I'll pass it back to you, Tom. All right, so Noble Energy. I'm going to pull the annotation tool for this as well. So let's look at the support and resistance. Right in there. We're just about getting a breakout. I think you could say that we're getting a breakout at this point. We'll have to see if it can close above that level there, but it matches up with these two tops back here. And you can see it's kind of on par here with those previous bottoms back in the summer. So we're getting that bounce. Honestly, when you look at this, do you not see that double top? And I'm going to point it out just in case you can't. That didn't execute. That's a, you know, a bearish reversal pattern. So even though we were coming up and looking like we were going to get this move, it failed at that overhead resistance twice. But it hit the neckline this last time and it didn't execute. It didn't actually become a double top pattern. And we got that bounce actually with a breakout. So to me, whenever I see those, you know, bearish patterns not execute, I find that to be especially bullish. And then I've got this really nice looking PMO. I mean, I'm not going to get ready to go out and buy this, but here's that scooter move. So you can see it's moving out of the basement, and that RRG is what got us here. So I think that's pretty good. I'm not going to annotate these last two, I don't think. Well, let me annotate it. Look at that PMO. It's really fascinating when I'm doing this, I guess you could call it scan, by using that RRG from the member page. But it's interesting. We're looking at mainly only what's going on with the scooter. Yet a lot of these charts that are coming up are showing interesting chart patterns. They're showing breakouts. And in this case, wow, I love that PMO. Nice scoop on it. It stayed above the 0 line pretty much. And that PMO buy signal is coming in right now today. So let's look at the support resistance areas here. And again, I think you could have made a case for a head and shoulders here that didn't actually execute. So again, a bearish pattern and didn't really execute. I think we could still see it's a kind of a complex head and shoulders. So, I mean, you could make a case for it coming back down, but and breaking down. But I really like this PMO. Look at the bottoms on the OBV. They're rising, as are the tops as we come through here. I mean, just right there, look at this price bottom and this one, and then compare them to the OBV bottoms. That's a lovely positive divergence. That's exactly what you want to see when you're comparing price and OBV. So everything's lining up pretty nicely here. We don't have that breakout yet, but certainly worth a look. And check out the thumbnail here with the 5-day scooting up above the 20, and the 20 is already above the 50, and it avoided that negative crossover. So again, I think that's pretty positive as well. And I think we had one more to look at. Oh, I don't want to save. And so let's put that in, and then I'll let you talk here, Tom. All right. And so this is the other, not actually a PMO buy signal, but we see that it's turning back up in near-term oversold territory. There's that scooter move. Not as good an OBV setup as we saw in the last one. But let's look very quickly here. And I keep saying that, very quickly. All right, there's that support level. There's some overhead resistance, although I think I might bring it up a little higher here to this top because it matches up with some of these tops over here. And, you know, what we can see, obviously, is this breakout is starting to occur on this declining tops trend line. Let's draw that baby in there. And yes, so you can see we're getting the breakout from that declining tops trend line. So I think that's positive. PMO is lining up for a buy signal. So this is how you can find, you know, I do my PMO scan, but this is another way to quickly go in and just see what's hot right now. And that's what the scooter rankings can show you from that homepage. So again, the way I got to it was over here. Typically, you're going to see this because that's the default. Just go to, say, top 10 and pick scooters instead. These are what's in the top. These are the high batting average stocks. These are the movers, top up. Of course, you could always do top down, but in a strong bull market, wouldn't recommend looking to pick losers. So what are you going to show us here, Tom? I know I took up a lot of that time. I apologize.
Let's take a look. Start with the home page. And first thing I want to do is just kind of talk a little bit about, areas of the market that you might be interested in and how you can use the scooters to find some pretty good stocks. So one of the areas that we've talked about quite a bit recently are the retailers, and many of the apparel retailers have really caught fire. And this is a chart of the index, the apparel retailers index. So you can see the huge move up, very heavy volume, a lot of money been pouring into this group. I don't really like chasing it, but on a pullback, I would be pretty interested in some of the stocks in this group. The other thing to keep in mind is that this is the time of the year for the Russell 2000. And despite the fact that it's down, of course, the market overall is down as well. I think that this recent push to the upside, maybe with a little bit of profit taking along the way, I'm expecting we're going to see higher prices into year end. So when I consider that the retail stocks are doing well, and I know that the small caps have been doing pretty well, and that historically this is a good time, what I would do is from the home page, you can look under scooter reports. So let me just move up here. So right here is scooter reports. This comes under the reports and analysis tools. And if you click on this, the homepage that Aaron was showing you earlier with the scooters, the top 10 and so forth, this is the rest of the list. So, for large cap stocks, these are the top 10 scooters, but you can see there's a whole lot more. And so you can find all of the large cap stocks here in order of their scooter rank. But I like the small caps. So the first thing I would do is go to small cap stocks. And then once these come up, you can click on industry. And as I go down here, you'll see here are the apparel retailers, and they're in order by the scooter. So if you know the group that you're interested in, you can quickly, and I'm also even further narrowing it down to the retail space. Now, there are ways to run scans and get the same information, but this is just I wanted to show you a different way to get into the scooter reports. So as I go through, you can see that the top apparel retailer in terms of scooter ranking is Boot Barn Holdings, BOOT. So let me go ahead, and I've already jotted these down on it, so I don't have to keep coming back to this page. But let me go through and just go over many of the stocks that are on this list. So we'll first start with Boot Barn. And what you're going to see in any stock that carries a huge scooter ranking like that up in the upper 90s is that you're going to see a big advance, and price action is going to be pulling away. Your short-term moving average is going to be way above your longer-term moving averages. That's what generates that really solid scooter rank. So Boot Barn looks good. The only problem I have with this stock is that, there's your Blue Mountains. And there are a lot of folks talking about not being concerned about overbought conditions. But as a short-term trader trying to manage risk, overbought means a lot to me, because if a stock were to pull back 5% from a longer-term perspective, it might not be a big deal. But 5% is probably going to get me stopped out of a trade. So I've got to watch and wait for these stocks to pull back at some point. And if they don't pull back, that's fine. I'll look for another stock. So Boot, I think, looks good. But as it moves up, the volume is starting to dwindle a little bit. You can see the MACD's rolled over. We got a little issue with momentum. So I love the stock. I just think it needs to settle down. So I'd have to wait. Some others, though, that were on that list, TLRD, Tailored Brands. Again, you're going to see these same type of patterns with these high scooter ranking stocks. Big move up. Your short-term moving average is just pulling away from the longer-term moving averages. And it's really easy to quickly move into the 90s if you've been underperforming for a while, because when you start moving, it takes a long time for this long-term moving average to begin moving, but these shorter term move very quickly. So these are the types of stocks that get those big pops in the scooter ranks when they start to break a trend. But you can see, as this stock, it gives you multiple times to consider getting into it once you spot that the trend has broken. For instance, this was a huge gap up right here. This volume, it already looked to me like it was starting to uptrend, but then we get the gap up, the heavy volume, the continued move higher here, and then notice the pullback. So we were overbought, but the pullback came all the way back down to the top of gap support. To me, that's a much better reward to risk entry than trying to chase the move. Unfortunately, since this gap up a week and a half ago, we've continued to move higher without much of a pullback. So I'd have to kind of keep an eye there. But I won't go through. Obviously, there were a number of stocks. I want to show you some of them in this space that are not looking nearly as good and may just be turning to the upside. So let's take a look first at Finish Line. You can see this stock was continuing to move lower, but look at that massive volume in that hollow candle. I think that is an exhaustion gap, and I could annotate this very quickly. But right in here, you can see the prior lows, the gap downs. Look at that shooting star off the uptrend, failure to get through, back down, and now here we are trying to get back up above this area. I think if we can break above about 12.5 with some increasing volume, I think this is the start of a pretty decent, pretty decent uptrend on FINL. And let's take a look. I think there may have been one other on this list that I wanted to show you. Chico's, yeah, I think this one looks kind of interesting because it's starting to show signs of an uptrend, but I don't think it's broken out above the key area of resistance that we want to watch. So you can see right there on this gap down, the hollow candle, we continued going lower. There's another hollow candle, but now it looks like we're starting to make this uptrend. We're holding on to the rising 20-day moving average. So this is one that I think if we can get a breakout above about 950 to 960, it could begin starting the uptrend that many of the other stocks in the group have already been enjoying. So these are a couple maybe that aren't ranked as highly right now that are starting to show signs that the others showed maybe a month or two ago. So we'll have to wait and see whether or not we get the breakout. But this is just a different way of using the Scooter reports to find some stocks that you might be interested in, spaces that you might be interested, like the apparel retailers or within the small cap space, kind of combining both of those. So with that, Aaron, I think why don't we go ahead and okay, we got a quick recap there on the scooter movers, as you can see on the page. So we got JD, MBL, APC, and DVN. By the way, I love that chart on the DVN because I own that one, and I'm trying to get a breakout above $39. I've been incredibly patient. I'm not a patient trader, so waiting for that one to get through 39. So hopefully it will. And then some of the small cap apparel retailers that I discussed, you can see Boot, Tailored, FINL, and Chico's CHS. And with that, we will move over to the 10 and 10. All right, you got them and ready. I think we were going to start with GDX, correct?
Yes, we were. So let's go ahead and start with GDX.
All right, what I'm going to do here, first of all, the downtrend, I'm not a big fan of GDX. I'm not a big fan of the gold miners, gold. They've just been lagging for so long. I just, in a bull market, gold is just not something I'm interested in. So, if you're interested in the group, probably maybe when Greg Schnell comes on, I know, Aaron, you talk about the big four. Sometimes they may be a little bit more appealing for you. I like to go with the momentum, and these stocks, in my opinion, just don't have it. So what I'm going to do, go ahead.
No, yeah, I totally agree with you on GDX.
Yeah, what I wanted to do, Chip was just talking about the relative ratios. Let me use it here as an example and show you. I'm going to pull up a monthly chart going back a long time, and I want you to take a look at the relative strength of gold miners versus the S&P 500, and tell me if this is where you want to try and park your money to outperform the S&P 500. For 4 years, it was a straight ski slope down. We did get about 6 months of strength here at the beginning of 2016, but we're currently downtrending again versus the S&P 500. So what I would simply say here, for me anyway, is that it's not a group that I'm excited about. I mean, I want groups that are going to be leading the S&P 500, not lagging. And I think right now that failure at the 50-month moving average and now rolling back over to new lows, lowest levels we've seen probably in about, 20, 21 months relative to the S&P 500. This is just not something that I'm interested in. So for me, I would pass. Okay.
Number 2 I have for you is PPC, Pilgrim's Pride.
Okay.
Interesting.
I felt like I was on Shark Tank there. So for me, I'm out.
Right.
If you ever watch that, I like the show. Anyhow, good. Yeah, PPC I like because I think it's at a very critical area of support. So I am a fan. I would, if I had to take a position, it would be on the long side. I mean, I'm not excited that it lost 50-day moving average, but I think, again, the biggest thing for me is price support. And here was the prior high. We gapped up on increasing volume, took out that high. That has held since. And we actually got a very nice looking, I don't know if it's bullish engulfing, but pretty close to being a bullish engulfing candle. I think that the test, though, is to get back through that 50-day moving average. So I like it. I'd keep a fairly tight stop. I think 31.5 on a closing basis would worry me if we were to break down below that level. But otherwise, I expect we'll see a resumption in the trend to the upside.
Okay, next one is LN, and that is Line Corp.
All right, LN, beautiful move up here, continued moving, and here's the reaction low, which we're testing. I think the 41 level is going to be pretty important here. Not to say that if it breaks down that it's in trouble long term, but I do think in the short term, there could be some issues if we lose this level. Because this is where, after the big move to the upside, sometimes you hear me refer to reaction low or reaction high. After this move to the upside, here's your reaction low. This is how we came back down, and all of a sudden the buyers showed up here. I mean, there's no real reason that I can see on the chart, but this is where buyers stepped back in, and they created a support level here. And so as we move back down, this is the level I want to hold, because if I don't hold here, probably the next level would be down here where we broke out above that earlier April high, closer to $39. So I think the 41.5 area, the 50-day moving average down to this reaction low support, is pretty important. I think the other thing, the lesson here to be learned, because I get a lot of questions, when do you sell a stock? Well, when I get a stock that's doing this, moving higher in price, and with a lower MACD, that is a certainly word for caution, but I think I'd take it even a step further and look down here at the volume as it was setting this high. I mean, the volume down in this area is nowhere near. Now, of course, you're not going to see this kind of volume, but I think 300,000, 400,000 isn't out of the question going back, maybe 500,000. And yet, when we made this last breakout here, you can see the volume was very, very light. So I think that the signs were of slowing momentum here. And so 50-day test, MACD center line is kind of what I'd look for. So I like the reward to risk now at 41. But if it fails to hold 41, I'd be careful, because I think your next step is 39. And I could even go, oops, don't need that. I could even go maybe one more, top of that gap support. 38 to 39 is probably where we're going to head if we don't hold 41.
Okay, I have for you next, I think you'll recognize this one, BABA, B-A-B-A.
Yeah. I think I've heard that one. Okay, Alibaba. I like the hollow candle, and it printed on some pretty good support. So I think that just made that support level even stronger with that move. And we want to really watch that level now because of that. But you can see these both these hollow candles opened at about the 165 level. And you can see after gapping up on heavy volume back in August, we closed at about, 163 or so. So that's going to be a pretty important area of support. Beyond that, you go to the bottom of this gap support at 160. And I don't expect it's going to go below that. I think if you start rolling over, looking at this MACD, if you start losing these support levels in here, I would be very cautious. Now, you might look at this and say, what about the heavy volume to the move to the downside? I don't think you violated any major support levels. So the volume really wouldn't bother me at this point. What would bother me, though, is if we had that kind of volume and we started losing these support levels here. So for now, I think it's just neutral. I think it's consolidating. But from a more intermediate term perspective, I would not be getting out. I think the stock still looks fine.
All right. Let's see. Number 5, GM.
Yeah, I think GM was upgraded this morning. I'm not positive, but I thought I read a report where GM had been upgraded. Actually, I know I saw that they had been upgraded because I had looked at the chart and I saw this candle yesterday on heavy volume, and just made me scratch my head a little bit, wondering who's doing the buying yesterday, a day ahead of the upgrade. Not that I'm claiming anything. I don't have any idea.
We do see that a lot, though.
But yes, it always makes me wonder when I see something like that. I think actually when I first started looking at GM, I used this candle kind of as a key support area. This is the top of gap support. And this was all the buying that took place with this heavy volume coming in. So I think 40.75 to 41 is a pretty good support level. And I would have a target on this stock of 46. And I think eventually we're going to make it. I think we got a nice uptrend sideways. I mean, you can call it a wedge, connecting the highs and then connecting the lows, a little bit of a squeezing piece of pie. But I look eventually for this to be broken and at least a minimum target of 46 to test the October high.
All right, number 6, TBF.
TBF.
Mm-hmm.
Right. All right, ProShares, this is the short 20-year treasury. So this should go in the same direction essentially as the treasury yields. So you're shorting the treasury prices, and treasury prices and yields go opposite one another. So by shorting this, you're anticipating that yields are going to go up. But the one thing that's kind of discouraging about holding something like this, and I haven't tracked it on a regular basis, but it doesn't seem to be doing the same as the treasury yields. It seems to be, there must be some erosion factor or something in this over time, because the yields, I mean, I always follow the 10-year treasury yield, and this is the 20-year, 20-plus year. But you can see yields are actually on the rise and continuing to move higher, by the way. And so yields are much higher than they were just 3 or 4 months ago. And yet, for whatever reason, we have the TBF here that is, a problem. I mean, it's not really following suit. So I'm not a big fan of this. I would probably just avoid trading this altogether, because even when I'm right and I'm getting yields to go in the right direction, this hasn't really participated the way it should. I mean, as you can see here, I was just showing you the 10-year treasury yield. And we just went back here on the TBF and put in a double bottom, while yields have risen and are much higher than where they were. So I'm not a big fan here. I would pass.
All righty. The next one I have for you is GMP.TO, and that's GMP Capital.
All right. I like this stock. I really like what's been going on since that recent bottom in November. So what I would do, first of all, it held the prior low. So if we pull this up as our major support level down here in the August low, see, we didn't quite get down there. You could call a double bottom, I think. But the reaction high here, which we struggled with, we have now clearly broken out, and we're doing it with volume increasing. The other thing that I think that this breakout is just simply confirming what we were already seeing on the chart, which was much more bullish technical action. I love to see that rising 20-day moving average hold as support with another breakout. We didn't even pull back to the 20-day before we broke out again. I think the momentum, you can see the MACD clearly moving to the upside. And also notice during this downtrend, check out the RSI. We never went above 60, or maybe, I don't know, maybe in here we hit 61 or 2. But basically 60 in a downtrend holds as resistance. Look at where we are now. The RSI is 71. This is definitely, to me, reeking of the start of an uptrend. I like this one. It's a little bit extended. I mean, just a simple test of the rising 20-day moving average would be a move down of about 13%. That's why I like to get them closer to that rising 20-day, just to manage my risk a little bit better. But I like the stock. I think this one's turned the corner, and unless it breaks down below that rising 20-day, I would continue to hold it.
Okay, next one, number 7. No, we just did 7. So number 8 is Juno Therapeutics, JUNO.
All right, this one did not hold where I would have liked to have seen it hold. I would have liked to have seen this breakout area right at about 47 and a half hold. And we went down below it, and the volume hasn't been light of late. So I think that there's maybe at least pause, for concern as we look. Next couple levels on this move up with massive volume, you can see this is the reaction low. So I think that the 40 level is likely to get tested. And if I was going to take a position, that to me is the best entry point. Because again, if it closes below $40, I'd probably exit very quickly. What I would really like to see is a move intraday below 40 and a close back above 40 to print like a hammer. And I think if I saw that, I would be willing to take a shot on the long side. But yeah, overall, I don't like the increasing volume and failure to hold support.
All right, number 9. It's actually my Monday setup, but it was requested. Alphabet, Google, GOOGL, of course. Wondering if it will hold the breakout. And my opinion is yes, it will, just because my PMO got a buy signal. So I'm looking at that level to hold.
Yeah, I like Google. I think Google's going to hold. I mean, you can see the price resistance coming across here at about 1,010. When we pulled back recently over those 4 or 5 days when technology was getting hit, that's when Chip showed you earlier in the show how technology was underperforming the S&P. Well, Google and many of the other big tech stocks were getting hammered during those 4 days, but notice support held. So again, look at the volume. A lot of people, I think, see the price going down and see the volume pick up and immediately say that this is not a good sign. But I say, as long as you don't lose major price support, it's not that big a deal. I mean, yeah, I'd rather it be light volume, but I just wouldn't draw too many conclusions. But here's that tail below price support and then the rally to close above it. And that started this uptrend. Now, I think the first test is whether or not we hold this breakout level. We're sitting right on it. If we don't, I would look for that rising 20-day moving average to hold. I think one of those two levels, in my opinion, will hold. I expect to see Google higher into year end. You have another one, Aaron?
Uh-oh. God, I'm sorry. I muted myself. 10 and 10. So the last one is Southwest Airlines, LUV.
Well, I got a chuckle because someone in the room talked about LUV and then also, I guess, Shake Shack. So the ticker is Shack. So we got Love Shack.
The Love Shack.
We got the Love Shack.
I won't sing it, but
I actually, while you were doing your presentation on scooters, I was chuckling. It was almost uncontrollable for a while. I don't know. I have humor. But yeah, LUV really looks good. Transports, I know we did a What Would You Do back around the middle part of November. And while I didn't expect this kind of a move in transportation stocks, I did think that transports would rally into year end. And this has been a huge move here on LUV. I think the breakout level clearing July now puts in a support area at about 64. And you can see this rising 20-day moving average coming up very quickly from underneath. So I think somewhere in this range, 62 to 64, is where I would be considering accumulating Southwest if I was looking to get in. I don't like chasing a stock after it's made this move with an RSI reading at 79. I know that goes against some of what Chip was talking about earlier. But again, my perspective being a very short-term trader, I don't like to chase. And if I can't get this one to pull back, then I would look elsewhere.
All right. And that concludes the 10 and 10. I'm going to show everybody which stocks we just looked at. I will also put these in the recap. As you can see, there's our 10, and all of those annotated charts that Tom just did will go into the Market Watchers live chart list later today. And with that, I think it's time to ask everybody, what would you do?
Well, actually, did we want to get a market update?
Oh, yeah, I guess we should probably do that. Let me go ahead and
hold off on that for just
hold off on that. Yes, market update. Thank you so much.
No problem.
I just get so excited about looking at all this stuff. I think everybody knows how excited we are about what we do. All right. So what's been going on? Well, it looks like the markets are making a rebound here. The Dow Jones is nearly into positive territory. S&P 500 has made a jump as well, shaving back about half the losses we've seen so far. And NASDAQ trying to make a bit of a move back, but as we can see, it's still in a pretty hefty downtrend here, declining trend channel. Russell 2000 ended up in the negative. At the start of the show, I think we were mostly unchanged on the Russell 2000, but we are starting to see it move up a little bit. Wilshire 5000 is back in positive territory. And wow, those treasury yields, Tom, they are just going straight up today and currently reading 24.68 for the 10-year. We could see UUP is now set an intraday low, reading at a 24.32. Commodities are doing well. They're up higher. And look at USO has now had a breakout to new intraday highs. Gold is suffering today, which is interesting. I know everybody asks, well, why is the dollar down and gold down at the same time? Hey, it happens. It's not a perfect correlation there. So with the VIX, it was up past 10 reading, but now we're at 980. and declines are leading advances currently. Let's go take a real quick look at our market summary here, just so we can see what's happening with industry groups. I did not cover that yet. And we can see, as far as the sector spiders are concerned, utilities are really struggling today. Not a good day for utilities. And honestly, I did write about this in the Decision Point blog a bit ago about utilities. You may want to check that out. Technology is also lagging today. Consumer staples are the leader, is showing leadership today, and energy right behind that. As far as industry groups go, oil services and paper, natural gas are leading at the top. Oil services up over 1%. And we can see utilities lagging, as are REITs. And finally, international ETFs, Austria, Spain, leading the pack right now as far as our international ETFs, with our laggards here of Taiwan, Mexico, and Russia, as well as Japan, all down over 1%. And with that, that concludes this final market update. And now we can get into, yes?
1 second. I just wanted to follow up on something before we get into what you do. So I pulled up the 10-year Treasury yield. Clearly, we're having a huge day, but a really good question came into the chat room earlier asking, with the 10-year Treasury yield soaring like this, because it is up 7.5 basis points now, why aren't banks moving higher? Because normally what we see are financials leading the market when the yield's having, when we see a day like this with yields rising so much. So what I would say is that if you look at the bank index, the dollar sign DJUSBK, this is the Dow Jones US Banks Index. Look at the move that we made back at the end of November and early December prior to the yields making this run. So see how much higher the bank index has moved over the past 2 to 3 months. And if we go back and we look at that 10-year Treasury yield, you can see that the yield actually has been declining. So I think what's been happening to some extent, I think there's two things. Number one, I think that the banks are performing well simply because the economy is expected to improve. So anytime the economy improves, it means lower loan losses. It means generally healthier customers and so forth. So that's good for banks in general. But the fact that the economy picks up enough speed to where we start seeing rates rise, that's when the momentum in earnings for banks can really start to move higher. So what I expect is that we're going to get a breakout. I've been expecting that we would get a breakout in the 10-year Treasury yield. I think ultimately we're going to go up and test this 260 area, and I wouldn't be surprised in 2018 if we hit 3% on the 10-year Treasury yield. Simply looking at this from a long-term perspective, going back many years, well, that's not the one I wanted, but if I pull up the 10-year Treasury yield on a monthly basis, if you go back and you connect, I'm actually going to go back even further than this. Let's go back 40 years. So if you can go back all the way back to the early 80s and you connect this downtrend line, I mean, rates have been going down for many, many years. This isn't any major surprise. So the long-term move is still to the downside. But let me go ahead and I always like to use red lines for downtrends. But it's somewhere up in this area. So if you connect these highs, and actually I think they all touch right about here. So that's a pretty good idea of the trend line that's been in play for almost 4 decades. And notice how we're getting close to this 3%. Also take a look at the high, the spike in the Treasury yield back at the beginning of 2014. So right here. So here's your double bottom. I think that is a very important high that needs to be cleared. I would not be surprised to see this uptrend continue. Get us up to about 3% to test this 2014 high on the yield, and then also test this very long-term downtrend line on the 10-year Treasury. Now, if that breaks, I don't really see it being a problem for the economy until we get maybe up to 4 or 5%. I think if we were to get above that, I think that could be a major headwind for the economy. But right now, we're operating from very, very low historic levels on interest rates. Normally you think, higher interest rates going to, squelch the economy. But I do think that we have room to the upside because I don't think interest rates in this area are going to present any kind of a problem for an economy if it is truly strengthening. but I wouldn't be surprised to see this level tested. So I just wanted to pull up this long-term chart and show you that, and just comment on the bank stocks, just realizing that we have already seen a move up. And while you expect to see a correlation, a positive correlation between the yields and banks, it's not like you're going to see it every single day. I think that the banks are very healthy, moving higher with these yields, and I suspect they're both going to continue to move that way into 2018. So with that, we will go into the what would you do, and this is one of our favorite segments, and I know it's one of yours as well. This is just a segment where we pull up a chart and just tell us literally, what would you do? Would you be a buyer? Would you be a seller? Would you just sit on your hands? So I'm going to pull the chart up, and feel free to comment on it in the chat room. And while you're doing that, I guess maybe Aaron and I can kind of go back and forth on what we would do. I don't like this chart. What do you think?
Well, I will tell you when I get through mine. But ultimately, I'm not a fan. I have that thought in my head of catching a falling knife.
Yeah, and I'm not seeing anything capitulatory about this just yet. I mean, some might say, well, wow, look at the 2 volume days there. Well, the problem is it really hasn't bounced from that. I'm not sure that that's gotten rid of all the sellers. I just don't see enough buyers coming in for a stock that fell from $24 down to 17.5 in 3 or 4 weeks. And we're not talking about one of these high-flying technology companies. We're talking about General Electric. Company has been around for 130 years or 50 years or whatever it is. I think they've been paying dividends since 1879, or I don't even know.
Right.
But this is a company that goes back a long time. And when you look at their chart, I mean, they can stay within $3 or $4 trading range for a long time. And to see this kind of a drop with this volume, I mean, there's no mistaking that there is massive distribution that's been taking place. A lot of folks getting out of this stock. I just have to see something. I need to see evidence of a turnaround. I don't want to sit here and think that 17.5 is the best price, because you might be looking at this stock at 12 in another, couple months or a few months. I'm just not seeing. I see a downtrend. I see a bear flagpole coming down, bear flag. I'm expecting this to resolve itself further to the downside. I'm just not a big fan of GE. And I think if you look at a longer term, weekly and especially monthly chart, here's the weekly chart. I mean, there is just nothing attractive for me as a short-term momentum trader to the upside. There is nothing attractive for me trying to step in front of this bus. I mean,
yes,
or whatever
well,
it is.
I have a few different opinions in the different time frames. So,
well, on the monthly, I just got one more comment on the monthly. Sure. And of course, this was back in 2008, back when anything financial related was just getting absolutely hammered. And of course, GE with its GE Capital unit was getting hurt. But you can see at the bottom here, when it finally did make a capitulatory drop to the downside and a huge recovery, when you look over here, I haven't seen that yet. I mean, I'm looking at a longer term monthly MACD that is pointing lower, just like it was back maybe in the middle of 2008. And I'm not saying we're going to get this kind of a move, because that was really tied to the financial collapse. I just think that right now GE is searching for a home, a support, and I don't know where it's going to be, and I'm not putting my money in it to try and find it. So I don't like it. So what I would do is simply stay away and completely avoid GE.
You wouldn't sell or short it?
I'm not shorting in a bull market.
Oh, there you go.
I'm just not shorting in a bull market. I mean, who knows? Maybe the worst thing that you can do in a bull market, in my opinion, is short a stock and lose money.
Right. I know exactly.
That would just really frost me. So I'm not doing that. I'm staying away from shorting. I guess if you said, okay, are you going to buy or are you going to sell? I would sell.
Right.
But what do you think?
Okay, so I'm going to play devil's advocate a little bit on the daily chart here.
Okay.
Get that up here.
Good luck.
I know, right? But there are actually just a few things that are good here. I can tell you right now, I'm not a real fan of this. If you guys want to put in your votes, just put GE and then a dash or something, and sell short, buy, hold, or leave it alone. So one of those three. That's all I need. And then I can tally them up at the end. Or actually, Tom, I don't know if you're watching it. We can get your sense of what the audience is thinking. So, devil's advocate. I do see, first of all, we have a base here that's actually holding support for the first time since back here in March and April. And we're finally finding an area where it's holding. There is a descending triangle, which is actually a bullish pattern. And I do have a PMO buy signal that came in very oversold territory. And while momentum isn't great, it is moving up. And what's happening to the tops here on price? They're moving down. So there's actually a positive divergence going on here. However, go ahead.
I think it's a mathematical certainty that PMO is going to turn higher because the rate of change to the downside was so fast and that PMO dropped so far. I mean, look at that reading at -6.
Oh, right.
The stock price is only 18, 17. I think that PMO and the MACD or any other momentum indicator that you look at has no choice but to go up because it just simply can't keep going down as fast.
It's an oscillator. And as we talk about oscillators, they have to oscillate. This is a long-term daily chart. So you can see how far GE stretched out of its normal zone, which it looks like is typically -4 to 4 or maybe -3 to 3. But anyway, yeah, it's way out of the zone. The fact that it just slowed down is probably why we did see that PMO turn up. But I mean, like I said, devil's advocate, just showing that as a possibility here. But yes, I wouldn't be looking at this as a buy just because it's found some support. And here are some of the reasons. OBV still in the thumbnail, you can even see it's still moving lower, even though prices seem to be consolidating more so sideways. Talk about no heartbeat on the scooter. It's been a flat line now for quite some time. And, you know, why would you jump into something, even if it looks kind of enticing because of a chart pattern or maybe because of this PMO? You know, you have to take into account a lot more. I know we're getting short here. Let me pull up my weekly and monthly that I annotated because this is really the reason I wouldn't want to touch this thing. I've not seen too many more textbook flags. As you can see here with the flag consolidation, another drop lower. This is, I mean, it looks textbook flag. PMO is dropping like a rock. You know, it's already stretched well outside its normal range. And on balance volume on the weekly chart, look at it. It's still, again, even though we're kind of finding some consolidation here overall, the OBV is moving lower. And looking at the monthly chart right here, you know, we're at an area, again, where you could make a case for support being held here. But really, I think that this area of support is a little bit stronger, mainly because of the bottoms that I see over here. These kind of match up with that top and that bottom. This, you know, matches up with that top and maybe that one too. But again, and you've got this ugly PMO, ugly OBV. So I would leave it alone.
Let me ask you a question. If you were to get into GE, where would you set your stop?
Well, let me go back to the daily chart for that, because clearly looking at the weekly and monthly, I don't think you could make any kind of a case for an intermediate or long-term buy there. You just can't. I think with the daily chart, you could maybe make a case for a real short-term buy. But as I even noticed in the chat room, and as we talk about all the time, why go into something that has the risk that this does? And there are so many better opportunities out there. But let's say, okay, like you were saying, where would you set your stop? So I'm looking in the thumbnail because it's really hard to see what that actually is. You know, I would say just looking at this and noting the PMO, again, I would really not get into this at all. But I would probably set my stop right, well, pretty much right about where it's at now at 1760. I wouldn't go for the lowest low. I mean, I think it's a short-term trade, so maybe you don't want your stops that tight. So maybe go down to that 1750 range. But again, I hate to even pick because I just wouldn't be getting into this. So if you do like the short-term play here with the PMO and the chart pattern, go for it. But yeah, I would set a fairly tight stop, because I think if this level doesn't hold, we're going to have another drop like we saw here, another price shock. So
yeah, I mean, we had some interesting comments in the chat box. I mean, most everyone is saying avoid, and there were some pretty funny comments. Let me see. There was one that oh, this is a funny comment. Where'd it go?
I know. So is it
a dead raccoon? Nobody wants that dead raccoon.
Dead raccoon. So it's pretty much a leave it alone, or do we have some sell shorts? People maybe thinking about.
I didn't see any sell short, but I didn't go through every comment. Most of
How
it's
about
just
buys. Did we get any buys?
Well, I did get one comment, check it again in 5 years. But for me, that's not an investment option for me. I mean, I'm a short-term trader, and I think everybody who follows the show knows that. So, for somebody who's a value investor, maybe at some point GE becomes a buy. But let's not forget that, number one, GE, I mean, if you're looking at GE versus Facebook or Apple or, some of these technology companies that are doing really well and have great momentum to the upside, is it really a choice? I mean, is anybody in that ballpark going to pick GE over those types of companies? And then you've got your income investors. GE just slashed their dividend 50%. So it's not even good for that. And I think that's why you're seeing so many of so much volume coming in on the sell side, is that there really isn't anybody that wants to own GE. You don't want to own it if you're an income investor, and you certainly don't want to own it if you're a momentum trader, not on the long side anyway. So I think that's the problem. I think GE's got to start to show some credibility. They got to come up with something that kind of, turns the table here. And honestly, they'll probably come out with something at some point. We'll get a quick pop to the upside. And that, to me, would be a great opportunity to get out. If if you get some kind of a, $1 or $2 pop to the upside, I would think that would be an interesting level to get out.
All right. So here's our summary. Today's symbol was General Electric. Tom says to leave it alone. I say to leave it alone, and the audience says to leave it alone. So I think
that means it's
we
going
should all leave it alone.
That means it's a buy of the century, probably.
Exactly. Oh my gosh, it's already the end of the show.
I know, and we've got just a couple minutes here. So what are your final thoughts as we go into the close? What are you watching? Anything?
Oh, I just wrote about the NASDAQ's short-term PMO buy signals. So I want to keep an eye on tech. But, honestly, going into the holidays, a lot of people leave. It's just not as exciting. So I'm just going to see if anything, if we get a big move to the upside. I called this week as a neutral, and I think we are going to continue into neutral. I think we're at a pause. We hit that all-time high. So I'm looking for the market to pretty much just move sideways. So
I love the market into the year end. I think, number one, history has proven time and time again that the market, when a lot of folks go on, holidays and so forth, I think you've got just a better psychological level of people trading in the market. I don't know. I think there's a psychological impact, because when I look historically at the market, January through November, the monthly calendar pretty consistent in how it trades. We have strength at the beginning, weakens, strength again in the middle of the month, and then weakens, and everything gets flipped in December. And the only thing really that you can point to is maybe the holidays. So I think that we're going to see the 10-year Treasury yield break out. I think we're heading for the 260 level in the near to intermediate term, maybe the next few months. And then I think that's going to carry with it financials and industrials. I think it takes out a lot of the defensive areas like utilities, and that to me is a great sign for a bull market. So I see the market going higher.
Yeah, I'm finally a bull on gold too. So I guess I'll be watching gold to see if it continues to ride a bit higher. So.
Yep. We got a couple of announcements before we go. Just let you know, Greg Schnell will be with us tomorrow. So he'll be here going over the point and figure. No Market Watchers live shows next week between Christmas and New Year's holiday, but we will be playing back the best of Market Watchers Live, including recent special guest interviews, educational segments, and so forth. You can come to the Market Watchers page, and we should have something up over the next few days to give you a little bit of a schedule of what will be broadcast next week. Our live shows do go through the end of this week, and then we will be back on Tuesday, January 2nd, 2018. I want to thank everybody for coming in today. Really appreciate your support of the show. Please remember to complete the survey as you exit. We love to get your feedback. Lower right-hand portion of your screen, how'd we do? You can click on that link. It's a very, very brief survey. Fill that out if you don't mind. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll be back tomorrow. Happy trading.